But we've learned a lot from annual reports.
I don't think we've ever gotten an idea, in 40 years from a Wall Street report, but we've gotten a lot of ideas from annual reports. I have found reading a lot of reports to be quite useful in terms of making business decisions. It's amazing how well you can do in investing really with what I would call outside information. I find inside information, I'm not sure how useful that is, but you don't have to understand all of them. You just have to understand the ones that you're thinking about getting in.
What I find is that it takes a long time to read the annual report, even if it's a comparatively simple business. Because if you really are trying to understand it, it's not a bit easy.
We want to understand the business better when we get through with the annual report than when we picked it up. And that is not difficult for management to do if they want to do it.
What you seldom see in an annual report is a sentence like this. This is a very serious problem, and we haven't quite figured out yet how to handle it.
Mr. Buffett, I was reading recently in Fortune magazine that when you invested $500 million in PetroChina back in 2001 or 2002, all you did was read the annual report. I was thinking that most professional investors with the kind of resources that you have would have liked to have done a lot more research and talk to management, maybe regulators, et cetera, et cetera. The question I have is what is it that you look for when you're reading an annual report like that? How is it that you were able to and did make an investment purely on the back of reading that report?
Yeah, well, it was in 2002 and 2003, and the report came out in the spring, and I read it, and that's the only thing I ever did. I never contacted any management. I never got a brokerage report. I never asked for anybody's opinion. But what I did do was I came to the conclusion that the company, and it's not hard to understand crude oil production and refining and marketing and the chemical operation they have. I mean, you can do the same thing with Exxon or BP or any of them, and I do that with all. I look at them. And I came to the conclusion it's worth $100 billion, and then I checked the price and it was selling for $35 billion roughly. What's the sense of talking to management? I mean, basically, if you talk to management of almost every company, they'll say they think their stock's a wonderful buy, and they'll give you all the good stuff and skip over things that it just doesn't make any difference. Now, if I thought the company was worth $40 billion and had been selling for $35 billion, then at that point you have to start trying to refine your analysis more. But there's no reason to refine your analysis. I mean, I didn't need to know whether it was worth $97 billion or $103 billion if I was buying it at $35 billion. So any further refining of analysis would be a waste of time when what I should be doing is buying the stock. So we really like things that you don't have to carry out to 3 decimal places. If you have to carry it out to 3 decimal places, it's not a good idea. It was something like PetroChina. It's like if somebody walked in the door here and they weighed somewhere between 300 and 350 pounds, I might not know how much they weigh, but I would know they were fat. That's all I'm looking for, is something that's financially fat. And whether PetroChina weighed $95 billion or $105 billion didn't make much difference. It was selling for $35 billion. If it had been selling for 90, it would have made a difference. So if you can't make a decision on something like PetroChina off the figures, forget about going further. And that's basically what we did. It's a straightforward report, just like reading just like reading Chevrons or ConocoPhillips or anything like that, just as informative. We're going to learn more, by going out and deciding whether you thought they've got one huge field in China, whether the life of it was 13 years or 14 years or something of the sort. They should hit you between the eyes. Charlie?
Yeah, I would argue that we have lower due diligence expenses than anybody else in America, and that we have had less trouble because we had less expense. I know of an investment operation in America that pays over $200 billion a year to its...
200 million.
200
million.
Yes, yeah. 200 million, pardon me, to every year to its accountants, a lot to help them with due diligence. And I think our operation is safer because we think like engineers. We want these margins of reliability.
When we get a call on something like the Mars-Wrigley situation, if we don't know enough about Mars and Wrigley by this point, so that we have to go out. I still like to go out, of course, and sample all the bars. So we have it 15. I mean, I feel I owe that to the Berkshire shareholders. But but I'm not going to look at their labor contracts or their leases or anything like that. If the value of Wrigley depends on a specific lease someplace or a specific commitment to this or that, or a given environmental problem, forget it. There are these overriding considerations that are enormously important, and then there's a whole lot of trivia that doesn't mean anything. That we have never made we've made plenty of big investment. I've made plenty of big investment mistakes. I've never made one, in my view, that would have been avoided by conventional due diligence. And we would have spent a lot of money, and we would have wasted a lot of time, and in some cases we would have missed deals simply because we wouldn't have committed fast enough.
I know that you read lots and lots of annual reports, and I'm curious what you are reading for, if you would share that with us. But I'm more curious, because I think I know what you're reading for, if there are any disclosures, any further disclosures that you would like to see companies make in their financial reporting, or that the SEC require in financial reporting or proxies or other communications with their shareholders. And that would be for both you and for Mr. Munger.
Yeah, the main thing that they can't mandate in annual reports, I really like to have, I like to know as much as I can about the person that's running it and how they think about the business and what's really going on in the business. Now, the SEC mandates a lot of information, and some of that is helpful, but there's an intent behind the report. I mean, if it's a sales document, I'm less interested. I don't see any way to mandate what I'm talking about, but that's the kind of report I'm looking for. What I'm trying to do as I read reports, I like to understand just generally what's going on in all kinds of businesses. If we own stock in a company, in an industry, and there are 8 other companies that are in the same industry, I want to own or be on the mailing list for the reports for the other 8, because I can't understand how my company is doing unless I understand what the other 8 are doing. I want to have the perspective of, in terms of market share or what's going on in the business or their margins or the trend of margins or all kinds of things that I can't get unless I know. I can't be an intelligent owner of a business unless I know what all the other businesses in that industry are doing. And so I try to get that information out of a report. If I'm thinking about investing in a specific company, I try to size up their business and the people that are running it. And over the years, I found reading a lot of reports to be quite useful in terms of making business decisions at Berkshire. If we own all of a business, I want to own shares in all of the competitors just to keep track of what's going on, and I want to be able to intelligently evaluate how our managers are doing that, and I can't do that unless I know the industry backdrop against which they're working. It's amazing, how well you can do in investing really with what I would call outside information. I find inside information, I'm not sure how useful that is, but outside information, there's all kinds of information around as to businesses, and you don't have to understand all of them, and you just have to understand the ones that you're thinking about getting in, and you can do it if you just, nobody will do it for you. You can't read. In my view, you can't read Wall Street reports and get anything out of them. You have to do it yourself and get your arms around it. I don't think we've ever gotten an idea, in 40 years from a Wall Street report, but we've gotten a lot of ideas from annual reports. Yeah, I would say that on average in a business we're really interested in, even though we know what to skip to some extent, what to read, I mean, it's going to be 45 minutes or an hour on a report, and if there are 6 or 8 companies in the industry, that's going to be 6 or 8 hours perhaps, and then there are quarterlies and a lot of other. I mean, the way you learn about businesses is by absorbing information about them, thinking it, deciding what counts and what doesn't count, relating one thing to another, and that's the job. And you can't get that by looking at a bunch of little numbers on a chart bobbing up and down about or reading market commentary and periodicals or anything of the sort. That just won't do it. You've got to understand the businesses. That's where it all begins and ends.
What I find is that it takes a long time to read the annual report, even if it's a comparatively simple business. As if you really are trying to understand it, it's not a bit easy.
I'd like your advice on how to understand annual reports, what you look for, what's important, what's not important, and what you've learned over the years from reading thousands of reports.
Well, we've read a lot of reports, I will tell you that. And we start by looking at the reports of companies that we think we can understand. So we hope to be reading reports, and I do read hundreds of them every year. We hope to be reading reports of businesses that are understandable to us. And then we see from that report whether the management is telling us about the things that we would want to know about if we owned 100% of the company. And when we find a management that does tell us about those things and that is candid in the same way that a manager of a subsidiary would be candid with us and talks in language that we can understand, it definitely improves our feeling about investing in such a business, and the reverse turns us off to some extent. So if we read a bunch of public relations gobbledygook, it has some effect toward a business. We want to understand the business better when we get through with the annual report than when we picked it up. And that is not difficult for a management to do if they want to do it. If they don't want to do it, we think that is a factor in whether we want to be their partners over a 10-year period or so. But we've learned a lot from annual reports. For example, I would say that the Coca-Cola annual report over the last good many years has been an enormously informative document. I mean, I can't think of any way if I had had a conversation with Roberto Goizueta or now Doug Ivester, and they were telling me about the business, they would not be telling me more than I get from reading that annual report. We bought that stock based on an annual report. We did not buy it based on any conversation of any kind with the top management of Coca-Cola before we bought our interest. We simply bought it based on reading the annual report, plus our knowledge of how the business worked. Charlie?
Yeah, I do think if you've got a standardized bunch of popular jargon that looks like it came out of the same consulting firm, I do think it's a big turnoff. That's not to say that some of the consulting mantras aren't right, but I think there's a lot for sort of candid, simple, coherent prose. A lot to be said for it.
Almost every business has problems, and we just assume the manager would tell us about them. We would like that in the businesses we run. In fact, one of the things, we give very little advice to our managers, but one thing we always do say is to tell us the bad news immediately. And I don't see why that isn't good advice for the manager of a public company. Over time, I'm positive it's the best policy, but a lot of companies, they're dying just to pump out what they think is good news all the time, and they have this attitude that that you've got a bunch of animals out there to be fed, and that they're going to feed them what they want to eat all the time. And over time, the animals learn. So we try and stay away from businesses like that.
What you seldom see in an annual report is a sentence like this. This is a very serious problem, and we haven't quite figured out yet how to handle it. But believe me, that is an accurate statement much of the time.